I know many of you are frustrated because when you see that global interest rates have been rising steadily quarter over quarter, and then inflation has hit like record high year over year at 6% inflation in 2022. And here you are expecting the CPF board to raise their interest rates from the measly 2.5% OA to the mediocre 4% in your special account, Medisave account, and the retirement account. All these interest rates have not risen with the economy. And you are thinking, even CPF interest rates cannot keep up with inflation, which was 6.1% released by Singstat. This also means that if your annual salary increment is less than 6%, effectively you are taking a pay cut because your salary now has less purchasing power than before. Now that's not all, because GST has risen from last year 7% to current year 2023 8%, and it's even going to raise even further next year to 9%. That's not the most irritating thing, right? Because you realize even your risk-free assets like treasury bills and fixed deposits are giving you almost 4% per annum of returns in terms of interest or yield. And you see, your CPF is just giving you 2.5% OA, 4% in SMRA. What a freaking joke, right? What is CPF board doing? Now, just in case you do not know of these fixed deposit rates and T-bill rates, then do come over to my Telegram group because I will update my community on the latest fixed deposit rates as well as the T-bill yields that you can apply for to use your money better. So join us at Honey Money SG Telegram group. Now this will be a two-part series because I felt that there is so many things to talk about. So in the first part, I will explain why are your CPF rates not increasing with regards to the economy and interest rates. And for the second part, I will talk about how to make your CPF savings work harder for you so that you can at least keep up with inflation. So today, let's talk about part 1 first. How are CPF interest rates determined? Because this information is actually placed in the CPF website. But CPF website and other government websites are so difficult to navigate, right? Like even if you do a Google search, it is much easier than you trying to navigate into the government or stat board pages. So I have found the web page regarding this CPF interest calculation. How are they going to determine the interest rates? Starting from the ordinary account, the OA, how do they determine 2.5%? So you see, the way they calculate OA interest rate is that they take the 3-month average of the bank account savings rate. Local banks only, so we are talking about DBS, UOB, OCBC, and what are they giving on their base interest for the savings account? And this is actually reviewed quarterly. So when they take the 3-month average local bank interest rates, they will compare it with the legislated interest rate of 2.5%. This is the minimum by law that they have to pay you on your CPF OA. So 2.5% per annum versus the 3 months average of the local bank interest rate. And to be super clear, it's only on the basic interest rate of the savings account. We are not talking about high yield savings account, all those high interest savings account that you have to jump through several hoops, all those things. Not like your UOB 5% or your OCBC 4.7% or something. No, okay? Only the base interest, which is like 0.05% to 0.1%, this kind of level. Anyway, if you take a look at these statistics based on what is presented on the CPF website, you will realize that the local bank interest rate is around 0.21% per annum based on the 3 months average. So 0.21% versus 2.5% legislative rate. Of course, they will have to take the higher of the two, which is 2.5% per annum. So the conclusion here is, unless the local banks raise their base interest rates for savings account to above 2.5%, more likely than not, you will not see a change in the ordinary account interest rate. It will just remain at 2.5%, which I think is so much higher than that 0.21%, right? So if you're hoping for CPF OA interest rate to rise, I think it's quite fat hope lah. Unless you see the bank give you base interest rate of at least 2.6%, then we can see a change. Otherwise, it's legislated by the law that CPF OA will pay you 2.5% per annum. Now that's for CPF OA. Let's move on to the next account, which is the special account and the Medisave account. So the interest rates of these two accounts will follow the 10-year Singapore government security rates based on the 12 months average yield of 10-year Singapore government securities at an additional 1%. And this is reviewed quarterly as well and is subjected to a floor rate of 4%. So this will also mean they take the higher of 4% versus a 10-year SGSU. And for retirement account, the RA, which is created from age 55 onwards, the calculation is the same, just that the review is done annually instead of quarterly. So based on the average yield of the 10-year Singapore government securities, right now, based on the past 3 months moving average, that is 2.47% per annum. And if you add the additional 1%, that means it is at 3.47%, which is still lower than that 4% floor rate that we are talking about, right? So it's a higher of 4% versus 3.47%. So SA, MA and RA has to take 4% instead of 3.47%. So the conclusion here is, unless the 10-year SGSU is above 3%, then you add the additional 1%, that will total up to more than 4.0%, right? And that is when you will see a change in the interest rates of SA, MA and RA. Otherwise, if the 10-year SGSU is lower than 3%, there will not be any change. So are you clear on the terms and conditions now? You see, CPF board like credit card also have terms and conditions one. It's not suka anyhow change. It's not randomly they happy they change, they not happy they decrease. Okay, it's not so easy that they change the interest rate one. There are laws set aside for the CPF interest rates. Quick pause, my first online course, Advanced Credit Card Mastery ACCM, is now on pre-sale. So I will teach you and share with you what are the best ways to really push your credit card to their maximized benefits, and also give you a private Telegram group so that we can share the real hacks that no one can be shared on public. So if you want to get this course at the cheapest rate, you have to enroll right now at the pre-sale at 88 Singapore dollars, because this will be the cheapest ever, and once it goes live, it will only become more expensive. So hurry up and go and enroll in this course right now. Now, before you jump over the fence or the screen to come and scold me or criticize, I think let me bring you back time travel a bit. Do you remember that before the second half of 2022 last year, we were in a low interest rate environment? And you know what that means, right? You look around at your high interest savings account or even your fixed deposits, they are giving at max 1% per annum. Even when you have so many hoops to jump through for your high interest savings account, or like your fixed deposits, you place like a 12 months, it's only giving you 1%. And even back then, your CPF OA is still paying you 2.5%. That is 2.5x the risk-free rate. And your special account, MediSave account, don't need to say 4%, 4x the 1%, you know. Do you remember the good times? And during those good times, do you complain? Do you complain why the CPF is using so much government money to pay you high interest when the board interest rate is only at 1%? Did you complain? No, you didn't complain, right? 2.5% you happy you take, 4% you even happier you take. So now the tables have turned where the risk-free rates are much higher than the CPF interest rates. Are you going to complain? I think yes, you're still going to complain if you have not watched this video. Once you have figured out what are the calculations and the laws with regards to CPF interest rates, maybe you will understand the CPF board a bit better and understand why they are not increasing the interest rates. And don't forget that we were in a low interest rate environment ever since the Great Recession in 2008, where the Lehman Brothers crisis has fallen upon us. And since then, interest rates have been really low. So more than 10 years, no one has complained about the CPF interest rates. Until now, even less than 1 year, you know, second half of 2022 until now, less than 1 year, you're complaining already. More than 10 years of good interest rates of the CPF, no one complained, you know, until now then you'll complain. Fair or not to the CPF. Also, you have to think of the big picture. Do you know that a lot of housing loans, a lot of homeowners are taking the HDB loan at 2.6%? And that is 0.1% above the OA interest rate. If the OA interest rates were to raise to above 3% or even 4%, do you know how much more interest expense these homeowners have to bear or not? That's a very large part of the population that's going to be impacted. So how are we going to react to this situation then? I think first thing to do is stop complaining. Complaining will not help or change the situation anyway, so stop being a whining loser. And instead of blaming others or the government, why not work on yourself? Look at other areas where you can either increase your income sources or reduce your expenses. Like I always say, right, hope is not a strategy. Every day you hope for the CPF interest to increase. Will it ever come or not? You don't know. But every day you hope, it also won't come one. Because the rules are already spelled out like I mentioned earlier on the calculation. So the most important thing is to take responsibility for your own actions. You yourself can determine where you want to allocate your money, whether into investments, whether into high-yield savings account, whether into other saving products. How you're managing your money, that's the most important, right? If you think CPF is not giving you the best interest rates, then go and look for other places where it can give you higher return depending on your risk profile. And I believe these are the more mature and more appropriate actions than to whine and complain about everything like a loser. So y'all must wait for my part 2 of this video lah, where I show y'all how you can make your CPF savings work harder for you so that you won't complain like the rest of the people. But meanwhile, you can refer to my CPF retirement playlist here because I have other CPF resources that can help you make your CPF work harder.